Hello, everyone. Welcome to another episode of Konzia podcast. I am your host, Zahid Muhammad, with you. And today we have a very excited guest, Mark Sapsford, with us, who is the co founder and partner at CapEQ. With over 3 decades of experience in mergers and acquisitions, Mark has been instrumental in guiding businesses through the complexities of buying, selling, and growing in different stages of the businesses. Mark, we are very excited to have you on our podcast. Thank you so much for joining.
So, hey, thanks very much, and thanks for having me.
Sure. So, we would like to start a little bit with your personal journey. So, tell us a little bit what did you do before you started Cap EQ? Because you have tons of experience, more than 30 years in this industry.
Thank you. And so, my background, if I go all the way back, I was in the Royal Air Force for 7.5 years. And then after that, I then went to work for ExxonMobil for 9 years, working on the aviation side of ExxonMobil, and then onto a headhunting and recruitment business, which I then went on to sell. And then that brought my journey full circle into corporate finance, and then working with business owners around the world. And I'm fortunate enough to work with owners of businesses, whether they be in the US, the UK, throughout Europe, down the Middle East, and then down through China, and then through to Australasia. So that's my full journey on how I end up in corporate finance.
That's definitely an exciting journey, and I see like it has been very, like international. A lot of countries, and I could see that as well when I was checking your LinkedIn profile, and I was very impressed. So, how did you transition from working for other companies towards, like your own, starting your own company and being a co-founder at CapEQ? So, tell us a little bit about this journey as well.
Yeah, that's a really good question. And I think from both James Pugh, who's the other co-founder, um, both of us decided that we wanted to be a more, and forgive me, I'm not casting aspersions on the rest of corporate finance and the rest of the world, but be more ethically driven in what we do. And so we set our stall out from day one that we were going to be a B Corp. And so we set our stall to become the first corporate finance house in Europe to be B Corp certified. And so what does that mean is we give honest and um, uh, honest advice to our clients. And in fact, sometimes, in fact, most times, brutally honest advice, because it's not to our benefit to just take clients to market when we know there's not a market. So for us, it was doing the right thing by clients and finding the right buyers around the world and doing the right thing for them. So we didn't need B Corp to be ethically driven. We've always had a strong ethical backbone to do the right thing. B Corp enabled us to have the label above our heads to say we actually do the right thing by our clients. So our desire was to do and find the right buyers and the right fit and ethos for our clients, wherever that be in the world, to not only maximize the value for the shareholders, which is important, but also to make sure that we transition a business so that the stakeholders are looked after as well. So the employees, and we're finding that next home and that next growth trajectory for the business to go on and grow, which is fundamentally important for us as a team.
Definitely. So I would like to also understand, like how big is this? So you mentioned your other co-founder as well. So how big is your team? So which markets do you cover? So with your own, with your corporate career, I see like you mentioned a lot of countries, but I would like to understand which markets do you cover with your company?
Yeah.
How big is
So
the team?
absolutely. So we cover the US and Europe and the UK. Uh, I would love to say the UK is still part of Europe, but it's not. So the UK and Europe and Ireland. And that, to be fair, it covers it. It will take us all the way down to the Middle East. In essence, we are sector agnostic. We work with clients where, as I said very clearly, with the view that we want to make sure that the business and the owner who is selling the business wants to sell the business for it to go on and grow and take the employees with it. We're more reluctant to work with businesses that are just trying to maximize value and then walk away on day one and not care about the employees. For us, we because we think they're intrinsically connected, and that is where the maximum value for a business will be found if you can find that right fit and ethos wherever it be in the world for then that organization to go on and grow. So it's part of that. So we're sector agnostic. We predominantly do, if you looked at our portfolio work, it's predominantly in the software space and has been for the last few years. But I think that's where the clients where we've been working with. We do a lot of in the health space, a lot in the waste space, an environmental ESG perspective. Is probably where we sit. But again, we will work with most organizations if we can see there's a connection and we've identified there is a market. And as a team, we are a team of 13. Of the team, all of us are senior individuals. So we don't have any juniors. We probably will in the next few years bring some juniors in. But at the moment, we think it's critically important that everyone that is on the team that is working for a client is a seasoned individual and has worked in M&A for more than between 10 and 15 years, because that enables us to be as successful as we are to find that right fit and ethos for our clients' businesses. And also, when we work on the buy side, when we're identifying targets on behalf of business owners or listed entities, we're able to bring the highest quality of individuals to the table to be able to fast track that process.
Oh, definitely. So merger and acquisition. So it's so when we see like this name, so we see people who come with, like a huge experience, 30 years, 40 years. So I totally understand. Like you need people who are well versed what they do, and they come, with a lot of experience from the industry. And I could see that in your profile, in your co-founder's profile as well. So I would like to understand a little bit more from your side. For example, um, in which stages of the business or founders they come to you, they work with you, and what is like the process like? So because we have more than 20,000 businesses in our network, a lot of them they are listening to this podcast as well. So we would like to kind of like understand in which stages of the business the founders should look for an advisory service like you. So what exactly is the value that you guys can provide, other than like selling the business? So because I was talking to you last time and you also mentioned that you help businesses grow and come to a point where they can sell profitably. So I would like to understand like this journey as well.
Yeah, and I would, Saeed, I'd love to give you a really easy answer. I think let's start with sometimes business owners. Let's take SaaS as an example. SaaS businesses, where they get the attention of buyers, is when they attain a 1 million ARR business. Is the number the golden number of where buyers start to look at those businesses and understand that they are a viable software as a service business and they can see value. Now, sometimes it may be that those organizations are around the 30, 40, 50,000 per month run rate, which is below that 1 million of ARR, annualized recurring revenue, and they just are trying to find and navigate their way up to that number. And sometimes we will sit down with them over several months, in fact, maybe 6 months to a year, and help them look at their business in a different way to understand how we can get that metric up and that monthly revenue up to be able to achieve the over the 1 million of ARR. So it's sitting down and working with business owners to help them do that. Um, in essence, so that's one example of where an owner may come to us where they're struggling to find or navigate their way. Another one may be health, and it may be a health issue within the owner or their family, and they've decided that actually to find the next home for their business because they're not able to give the same level of commitment to the business as they were before because they're dealing with those issues. So they'll come to us in that situation. Then you may have family issues. You may be second generation, third generation, and now the third generation don't want to do what the first and second generation have done, and they want to find the right home. Or it is just about that case of there is and it's hard for people to understand, but we all have our levels in a kind of business we can operate in. There are very few individuals or CEOs, and we can all name the really successful ones that have started in an office and then ended up in a multi-billion turnover business, and they're still the owner. But they're very rare. Very often you see that business owners have a skill set to get a business to a specific level, and then they hit a ceiling. Reality is that glass ceiling that is there needs to be sold on to another business to then go on and grow it. So it could be a combination of all of those events, or it could be that they're just dealing with growth. They've been dealing with growth for many years, and now they've just got to a point that they're just tired and they can't go on and, and carry on growing. But there's a myriad of reasons. Not one is wrong or right. It is just working through, and it is where a business owner finds themselves. So hence the reason why it's a multiple layered answer to your question.
Yeah, definitely. So another question. So I think this is also linked to. So you mentioned, like SaaS businesses, businesses that are. So golden number is for sure ARR 1 million. So whenever like the founders they start their SaaS business, so this is something like we really want to touch, because it is a kind of like a an acceptance from the industry or approved, okay, so this business model is viable, it is working, so this can be sold, like in future. So my question is related to people who are in this journey a little behind, like they are at 300,000, 400,000, 500,000. So 300,000 to 500,000 ARR per year, and they are struggling to grow their business. And often when we talk to very experienced people like you, or like other M&A experts, so we see them, like as I would say, like a very corporate class, like, so there is often a perception, okay, so these are very expensive, like services. These advisory services are super expensive. They are only for companies that are making 2 million, 3 million ARR per year. So I would like, last time we were also discussing this, and you mentioned like 300,000 to 500,000. These founders, they work with you as well. You help them nurture their business, grow them. So I would like to understand how CapEQ's approach to nurture these businesses is different than other companies in the market. Of course, there is an ethical element. And what exactly is the pricing model? Like when founders with small ARR come to you guys, what should they think in terms of pricing? So what
Yeah,
exactly is the
really.
business model?
Yeah. Okay, so um, in essence, ARR is only one of the foundation blocks to valuation. The other one is net dollar retention rate. Whatever, or I'm using dollars just for an example, whatever currency you are. So it's one thing to be chasing the revenue pace, but it's also you need to be in the back of your mind thinking about the retention rates of your customers. There's no point in running and continuously spinning the wheel and getting more and more and more clients. As you are gaining clients, you are losing clients on the back end, and so you need to bring those two constituent parts together to make the model work. And so what we see multiple times is businesses in the SaaS market are chasing the 1 million ARR, but not thinking about the retention rates. And so they're having to work twice as hard or three times as hard to keep the numbers up because the attrition rate is happening behind them. So it is for us to sit down with a client and go, let's look at the whole picture. Look at the revenue, but what's underneath the revenue? What is your customer base underneath? What is the retention rate? What is going on there? And also, how do you retain customers, and do you have um, a self-licensing, so it's a perpetual license that runs underneath, all of these constituent parts, because often we see businesses that are just, and quite rightly so, when you start a SaaS business, all you focus on is how do I get to customer? How do I get the customer to pay on a monthly basis? And how do I quickly get as many as I possibly can? But sometimes that may not be, that is one of the answers. The other bit is your services and how complex your services are and how you can retain customers is far more valuable. And then if you look at your customer base today, you can increase your revenue at the same time. And so it's thinking about your business as multiple cogs in a process. Sometimes it's not the biggest cog in your process, it's the smallest cog that may be within the retention piece. So for us, it's to pull back, look at your business as a whole and go, right, how is it working and what can we do? And how can we help you get to that 1 million of ARR? How do we charge in that circumstance? To be fair, we always sit down with the client and say, look, where is your journey? Where do you want to go? Is this an exit strategy? Is this you want to get to 1 million of ARR and then you want to exit? If that's the case and we are all aligned and we believe, one, we have done the research, which we would do absolutely on our own watch, we'll go and do research to identify the transactional landscape, to identify whether there is a buyer for you before we start that piece of work. So we've got, now we understand the market and there's a market. You have a desire that you would like to sell into that market. So now we'll sit down and go, okay, together we will work together. Now, that may be for a period of time that we actually won't charge you, because for us, this is about getting to a destination. Once we have identified that you have got the revenue, we've got a market and we're going to market, then that relationship changes and we will start charging. And we charge over a monthly basis for the first 5 months, and then we charge a success fee at the end. But that is, and it is aligned with our clients on understanding where do we see the market, what can we do, and how do we get it there. But in some instances where businesses are very small at 30, 40,000 a month, there's no point in me charging those clients any money because they can't afford to pay the, as you rightly say, can't afford to pay the money. So for us, we're willing to go on risk for a period of time if we are, all the parties are aligned on what we're trying to achieve.
Oh, that's a definitely, a fair business model. I would definitely say, like, for small entrepreneurs who are, still a little behind in their journey, I think that definitely makes sense, and it is win-win for both parties, right? So, yeah.
Absolutely.
Another thing I would like to understand, and some of our listeners as well, you mentioned, like, so as a SaaS founder, I see there could be multiple requirements for a SaaS business. For example, understanding, like, in which direction they should grow, like the business side, and then there is the tech side, and then there is the legal side. So there are multiple elements of that, because I run business as well. I have set up a SaaS business as well. So I would like to understand, like, from your advisory services or from your side, like, your people, in which domains they are expert. Are they providing services or help on the growth side, or do they have the tech background as well? So in which domains you guys help these small companies grow to, like, 1 million AR?
Yeah, and so on the tech side, no. So from our side is an advisory side on knowing how business works and knowing it from the business perspective. So drilling through the numbers, so getting the detail from the numbers to understand what is going on the underlying part of the business. So from a numbers perspective, from a market and research perspective of understanding what's going on in the market. And so from that side is to drive the business to drive to growth, not from a tech side. The tech side often follows that process of identifying areas that need to be improved, or efficiencies that need to be made to speed up that acceleration. But from our side, is from the advisory and from the numbers perspective, which is understanding the underlying metrics of the business and what can be improved in that sense. Not, but definitely not from the tech side, nor from the legal side. We're not a legal team. We can absolutely put you in touch with incredible legal teams that we work with across Europe and Europe and Australasia and down in and across into the USA. But in essence, we're not a legal or tech team.
Um, Definitely. I would like to understand a little bit more on the process side and break it down. So, for example, like when a SaaS founder with an ARR of like 500,000, he comes to you. How does the process look like? So, are there like weekly calls or monthly calls? Do they need to come to your office, or do they get like a kind of a consultant allocated to their company from your side? How does this like day to day work look like? What exactly is the process?
Yeah, that's a really good question. So I think in the first instance, it is lifting up all of the bin lids and looking under or trash cans, looking in right into the depths of the business. So a financial analysis, and understanding the metrics and understanding what is in place first of all. A meeting of minds, and Sahid, I would say to anyone that's listening to this that they decide that they're going to work with an advisor, please make sure that you can work with that advisor. Make sure there is a meeting of minds and an understanding, because this journey doesn't happen in 1 week, 2 weeks, 3 months. This is a year of your life, could even be longer. So make sure that you have a relationship and you can work with the advisor and work through. So key to that. So that goes both ways. For us, if we understand the business and there is a common understanding of what we're trying to achieve, then we will work with the client. If there's a disalignment on any of the points, then we probably would say no, and we won't carry on. But so an alignment on that, an alignment on the numbers, and then a clear alignment on, as I said, understanding what the market looks like and understanding that. So we do all that piece, and that piece can take 2 to 3 months, 2 months probably, to pull all of that together. And then we can come back and say, right, now we understand your business, we understand all the numbers, we've now done the research in the market. This is the now with an informed view, this is what that market looks like. This is the potential, and then away we go. Then thereafter, it's probably depending on where the business is. If it's something that we need to be involved with pretty quickly, it may be bi-weekly calls, or if it's something that we just need to monitor and then assist at times, that would be monthly calls over a period of time until either the client or all of us are aligned on, actually we're close enough to the numbers, we can now show the trajectory of 1 million to 1.2 to 1.3 and away of ARR. Then we can make that decision on when to go to market.
Yeah, so I completely agree. Like the what you mentioned, like the meeting of minds is really important, right? So people who are coming into this, they should understand. Like an advisor who is coming, who he can see what you cannot see, right? So that so I would say like he is, because he has a tons of experience, like 30, 40 years. He worked with other co-founders with other businesses. He helped them exit. So that is why you are working with him, and I'm 100%, I'm with you on the point that this is a long term game. So it is not going to happen, like in 2 weeks or 3 weeks or 2 months. For example, bringing someone from 300,000 ARR to 1 million or 2 million, it will take time. And I think it's not just the advisor, it needs effort on both sides.
Absolutely.
Yeah. So I am sure, like in 30 years, you have worked with a lot of founders, co-founders, very experienced people. In SaaS, we see there are a lot of, like young people around. So they are building cool stuff, like with the AI, like a 20-year-old founder, like he's building something which is doing 3 million, 4 million, 5 million ARR. And on the other side, like a 40 years plus guy or a 60 years plus guy who is running a team of 100, 200 people. So I would like to understand what um what are the traits of successful founders. So what are the, like three, four, five things that you see are common in people who are building businesses with 1 million ARR plus? So share with us a little bit more on that front as well.
Yeah. Okay. So, um, you know, entrepreneurs are slightly crazy. We're all crazy. As an entrepreneur, often we're unemployable because we're constantly chasing and pushing and striving to do the best we possibly can. And so you see that in entrepreneurs all the time, and often entrepreneurs get bored very quickly. They are able and have the ability to see every shiny thing as the next best thing, and they're chasing the shiniest thing. And some of the most successful entrepreneurs in the world are very focused on chasing the shiniest thing, but not chasing all of the shiny things. So, keeping focus, keeping clear in what you want to achieve. And it's naive to say that anyone's journey is a straight road. There are multiple deviations and ebbs and flows in a business, and opportunities will come from time to time. It is the ability to assess which is the best opportunity, and the opportunity you just need to let go, is the hardest thing from an entrepreneur's perspective. And that's what I've seen over the years. The most successful entrepreneurs are the ones that have the ability to focus and be able to be very clinical in their delivery, and also their sales process, their onboarding process, the operational process in the center. They're just very clinical, and the ability to build a business on day one that can scale is really key to this. And if you are building it, and if you are building an ARR, sorry, if you are building a SaaS business today, then building it for scale will inevitably help you out in the future. So, don't build it for the size of the business you have today. Build for the future, and the future will come.
Oh, I absolutely love that. Build for the future, like so. And this is because as an entrepreneur, you are always playing a long-term game, like so. There is no short-term game there. I would like to touch a little bit more on the business model that you guys are having with CapEQ. So you are ethics driven. I have, like read through all the values and everything. So tell us a little bit more. So how do you, because you also mentioned that in some cases you say no to founders who are coming to you, right? So how do you balance profit and purpose, right? So it is always, like a tricky thing.
Yeah, and I look at and I don't think I think they're intrinsically aligned, because doing the right thing by our clients enables us to benefit as a team,
Yeah.
that we are successful as well. I think that the key to this is, for us, every client journey that we work on hopefully will be a success, and then they will be advocates for us, and they are. And all of our clients, you go on our website, you will see all of our clients, all the testimonials, and everything. But that is all about, you know uh, profit and purpose, ability to people, planet, profit. So whichever order you put it in, people are at the center of what we do. Our team is shares in the profits of the business, but it means that we're driving and doing the right thing by not our team, but also our clients. And if you're doing the right thing, then it can always work. The planet. So the planet, the impact on the planet. We, as I said, from day one, we decided we were going to go and become a B Corp. What does that mean to us? And I'll give you one example. We decided that we would not print anything, and in the 5 years that we've been in business, we've not printed. We've printed 5 pieces of paper in 5 years by mistake, by the way. But what does that mean? It means we have less of an impact. You know, we would probably print off about a ton to a ton and a half of paper every year. Eliminating paper out of our process means that we protect the planet and we plant trees as well. However, what it means to our clients is that they have an ability to access all of the information that is going on a day-to-day basis. Our platforms allow the clients to see all of the interactions we're having with the buyers around the world, and also on behalf of when we're buying businesses on behalf of listed entities, they can see all of our records and see what we're doing and our activity and everything else. So there are areas of where you start off with thinking about protecting the planet, but there are absolutely positives from doing it. And by doing and forcing those decisions has made a positive outcome for our clients and who we work with. And then the purpose piece, you know, giving back to our local communities like food bank and other areas. It's right. It's right that business does
Mhm.
that. You know, we
Yeah.
have to have, as a corporate responsibility,
Mhm.
we all need to think as business owners about putting back into our local community, because it is the local community that will enable other businesses to go on and grow and keeping people employed. And especially as we enter the AI world, and where jobs are starting to become under pressure in specific areas, you have to give back. You have to give back to the local
Mhm.
community, and utilizing suppliers within your local community to gain grow other businesses as you grow.
I mean, definitely. So these are very good points, and I am with you, Mark, on this. That the best marketing is word of mouth, and giving back to the society is, of course, very important. I would also like to understand you. You come with a 30 years plus experience. How did M&A landscape changed in the last 30 years?
Wow. Wow. Um, Look, I think the M&A world it has changed. It continuously changes, to be fair.
Yeah.
Um, I suppose the biggest example of that is, you know, the 2008 crash. And M&A is anti-cyclical at times. It goes completely the opposite way of where the market's going.
Yeah.
But M&A will always be a consistent, because when you've got markets that are really rigid and really tough and there's not money circulating, businesses have to go on and grow. They have to grow because they're often got shareholders that they report to, and they need to find growth from somewhere. So if they can't find it organically, they will acquire. um, Again, on the other end of on the other end of the spectrum, when things are going wrong, businesses will shed other businesses. So you see conglomerates go through cyclical events. They'll go through and they'll grow considerably by acquisition, and then when the market starts to get tough, they will then start selling off those assets. And so you're in a constant cycle all the time. I think that the markets, as probably they are more volatile now than they've been for a while. But of course, that's part of the rhetoric that's coming out of, you know, several countries at the moment, that is playing hard and fast with some of the metrics and some of the stock exchanges. But that noise is noise, and it's not the underlying tone. The underlying tone is businesses need to move forward, businesses need
Mm.
to go on and grow,
Yeah.
and they will carry on growing. So,
Yeah.
yes, there is a little bit of noise in the market at this point in time. And is it louder than it's ever been before? Yes, I would say yes. In the last few months, it's been louder, but every day or every hour and every day that goes by and every week, people are getting a little bit more immune to the noise and going, actually, I can't operate in this way. I can't operate with markets oscillating so much.
Mhm.
So I'm going to make a decision for my business. What's the right thing for me and my family, or my the business that I operate and run? I'm going to go on and acquire businesses because I we just need to do that. So I think at any given point in time, the markets can do one thing, but M&A does the other, and it's consistent, and it's a natural theme. The numbers may change, and agreed, in certain years there's lower numbers, but on average there's and there will always be M&A deals being done every year.
Yeah, because businesses need to grow, businesses need to exit as well, right?
Yeah, exactly right. Yeah.
So for our listeners, I would also like to ask you, what is, like the best piece of advice you would like to give to founders who are listening, who are in the process of growing their business? I understand it is hard. It is difficult to grow a business and grow organically. What exactly would you like to suggest?
Yeah, a couple of things. For those who are listening who have businesses today, they'll know this one, but it's absolutely the key one. You know, cash is king.
Yeah.
You can only run out of cash once, and so keeping that in mind, especially when you are a small SaaS business and you start to burn a lot of money very in the early days, very quickly get to learn how to not rely on any money that you've raised. The quicker you can get to your own profitability, over the break even threshold, and start to live within your own means. And sometimes that can be a challenge because it doesn't mean you're constraining growth because you're operating within your own cash flows. But the quicker you can get onto that trajectory and working within your own cash flows puts you in a better position, especially when you go to the market and you've proven that you are, again, the 1 million ARR, you're profitable and you're able to run within your own cash constraints is absolutely key. So first bit of advice. Second bit of advice, build big. Don't build for your business today. Build big, think big continuously, because that enables you to then grow into that headroom. If you build a business for what you think you are going to be in the next 6 months, you're going to be challenged very quickly and you're going to be consistently changing your business model to build the headroom. Build big from the day one. Think about the complexities of where you will be in 3 years and 5 years' time, and build the processes in place that will enable you to grow. Otherwise, it just brings complexity and you're continuously going back and looking over your shoulder and putting things right, whereas you should be focusing on the future and the growth.
I can definitely relate to that as well. So being a founder, so I can take, like better decisions when there is good cash sitting in the company bank account,
Yeah.
because it gives, like surety. Okay, so I can pay my team, so there is enough run rate available for 6 months, 8 months, right? So I would say I can focus more on the growth side, right? So I can take better decisions, and definitely. So I think it's the best piece of advice. So build for tomorrow. So like stay focused. So build big. So dream big. So these are, like definitely. I'm very thankful for sharing this piece of advice and your journey with us as well and with our audience. So, Mark, people who are listening and they are interested in the services, the advisory services that your company provides, or any other things like a piece of advice, or they would want to get in touch with you guys. So, what is the best way to reach out to you guys or
Yeah,
get in
so
contact?
please feel free, and we're happy to have any conversation. So from us, please feel free to reach us on capeq.com. If you go on there, you can see my details, James's details, and Doug, who are the three partners and the three team, or any one of the team you can reach out to. And we're happy to have a conversation in the first instance to see if we can help in any way.
I can definitely guarantee this because when I reached out, so guys, Mark is super friendly. He's super responsive. I got, like the call very quickly. So if you want to grow your business, if you are struggling, reach out to Mark. His team is very experienced. You will not regret that. Mark, thank you so much for your time. I am grateful that you came on my show and then you shared your journey and like a lot of wisdom as well. In terms of contact details, we will drop your contact details in the podcast as well. Thank you so much for joining.
So, hey, thanks for your time. I appreciate it.
Thank you. So, guys, if anyone who wants to come on my show, if you have an interesting story, if you want to share what you have done with our audience, feel free to reach out to me and I will be happy to host you on my podcast. Thank you so much for joining. Take care. Bye bye.